fact is, computers have taken over the markets, particularly anything that has to do with paper, precious metals, and the only way you're going to escape and beat them is by avoiding them completely.
You know, it's funny you brought that up because that was actually my next question. Our good friend Chris Duane and we both know David Morgan, they've both hit on this real hard, that silver is the Achilles heel of this criminal cabal. And the 375 million ounces that you're talking about traded in one day, if you don't follow this stuff day in and day out like we do, it sounds impossible. It sounds too hard to believe. It sounds like it's pie-in-the-sky nuttiness. It sounds like fringe conspiracy theory. But as Ted Butler has proven time and time again, it's real. And now you have guys like Eric Sprott and David Morgan and, you and really mainstream folks coming to the table and saying, hey, this is quantifiable criminality, and yet nothing changes. Let me end my own rant with a question, Andy, and the question is this. How can you explain the resiliency of silver when they can literally throw 375 million ounces of paper silver at it and only knock the price down a couple of bucks?
Well, look, as you said, and as David Morgan put in his video last week, it absolutely is the Achilles heel of the system. Actually, more specifically, precious metals are the Achilles heel of the system, but because silver is so small of a market with so little inventory, and it's estimated the inventory is no more than 1 billion ounces, which is not worth more than $35 billion right now. Because it's so small, it has the ability to have a supply shortage and therefore a squeeze at any second. And we've seen supply shortages both on the downside when silver was pushed through $30 an ounce in September of last year, and on the upside when it went to $50 an ounce back in April 2011. And of course, back in 2008, when silver was knocked down to $8 or $9 an ounce, the real price never got lower than 17 or 18, and most people don't realize that. The fact is, this is an incredibly, incredibly tight market, tighter than probably any commodity on earth, and that is why they are resorting to these exponentially off-the-chart methods of attacking right now. What we've seen is first we had a gradual government takeover of markets. It started 5 or 10 years ago. But in the recent years, starting with what I call D-Day on November 9th of 2010, we've seen such draconian methods of attacking precious metals with literally eliminating any pretense of naked shorting of what they're doing. And we've seen the 5 or 6 margin calls in a row. We've seen intraday margin calls. We've seen now these massive, massive dumps of paper ounces on the market. And still, I'm looking right in front of me at the strongest looking reverse head and shoulders pattern I've ever seen. I've said for some time now, I believe $20 an ounce was made impregnable on the downside after what they did, capping it in 2009 and 2010. And I believe that the same thing has now happened around $30 an ounce based on the capping that they've done over the last 15 or 18 months. So in my view, it's a powder keg just like the other guys have been talking about, and it's only a matter of time before it breaks past what I call the ultimate quadruple top breakout at $50 an ounce.
I did an interview with Andy Schechtman within the last year, and the name of that video was "Silver's a Powder Keg Ready to Explode." It seems to be a theme, and you know what? We all need to hear it, because when they beat us up and we go from 50 back to the 30s and the 20s and 35 and 30, it starts to feel like we're being cannibalized. It starts to feel like we're being beat up, and the beating will never end. But the good news is, as I try to share with others, you need to take advantage of this subsidy. When they throw 375 million paper ounces of silver at it, they're subsidizing your ability to purchase physical silver cheap, aren't they?
Absolutely. And again, people need to stop thinking about, this in an offensive way. You're not even investing. You are just owning real money, and you're doing it for defense. We're here to protect ourselves. So when people get excited, I get angry when the price goes from 40 to 30, but sitting here holding physical metal, it really doesn't change my life any. Because the whole point is you have to lower your expectations of the world, lower your cost basis, and make sure that your savings are in something that can protect you. It's not like people sit with their money in the bank and say, oh, I hope interest rates soar so I can make money in the bank. You sit here and you hold your real money as protection. If nothing happens, well, that's fine. But sometime soon something is going to happen, and you're going to be happy that you held it.
And as you cite that Apple flash crash, it is happening. I mean, what was that, 10% correction in one day?
It was an HFT screw-up, which made the price fall 10% in a matter of minutes. And people did lose money as a matter of that, because of that. But what I'm referring to in the big picture is people should not think of silver and gold as investments. They are savings. And what the real investments are is if you're holding your money in paper, because if you're in dollars and euros and treasury bonds, those things are going to fall spectacularly in price. Silver will not fall in price materially.
Well, Andy, before we let you go, let's hit on one more thing. Eric Sprott has made the point repeatedly that if miners are pulling silver out of the ground at a ratio of about 9 to 1 in terms of what they're pulling out in gold, okay, for every 1 ounce of gold being pulled out of the ground, there's maybe 8 or 9 ounces of silver. But you guys and Sprott funds and everybody's selling silver at a tune of 50 ounces for every 1 ounce of gold you sell. How long can that go on, and what kind of message can we leave with folks so that they understand the true reality of supply and demand here?
Right. The fact remains that when it comes to silver, everything is moving in the positive column. Again, the historic 16 to 1 ratio of gold to silver, which was basically lasted for hundreds of years until the 1970s, was based on the amount of gold and silver pulled out of the ground. It was about 16 to 1 ounces silver to gold, except, as you say, because of depletion, it's now closer to 9 to 1 going out of the ground. And also, per what you're saying about Eric Sprott's comments and what we've been experiencing, silver sales in dollars is pretty darn close to gold sales in dollars, and as a result, you couldn't have stronger proof that the paper market is holding down the price from where it would be. There is no doubt in my mind, per what I said in my last interview, that the gold to silver ratio is going to fall to at least 15 to 1 at some time in the future, and I wouldn't be surprised if it falls as low as 5 to 1. And frankly, if you run out of silver before you run out of gold, who knows what the price will be.
Yeah, and I think the Sprott point and your point is generally, so that people understand as we flesh this out a little bit, is that we can't see demand 5 times greater than supply in perpetuity.
Right.
6 times greater.
And once again, it's proving just how much effort is being put in to keep the price of silver down, and it will not stay this way. This is all paper sales. And again, I'll end by saying the one thing I've been saying all along, and Eric Sprott will tell you the same thing, as will all of our competitors. There are no buybacks. Customers are not selling anything. They haven't been selling any gold and silver back to Miles Franklin or any of our competitors for years, and they're never going to. So don't ever think that when you see a big smash in gold or silver that it's people selling. It has nothing to do with it. It is the gold cartel naked shorting paper, and it's only a matter of time before they completely and utterly are destroyed, as they were in 1968 with the London Gold Pool, and as they've been every single time in history where they attempted to subvert the forces of real money with paper.
You know what? I want to leave people with this. You are one of the best bloggers in this space, one of the best writers in this space. You're a workhorse. The stuff you put out is fantastic. It's fun to read. It's intelligent. It's in-depth. Tell people how they can find your great blog there on Miles Franklin, and they need to get it daily. Tell them about the newsletter. Certainly they can see your stuff on my website, SGT Report, but tell them how to get to Miles Franklin and how they can see your great work on a daily basis.
Right, milesfranklin.com. If you go on the front page, you can sign up, not just for my daily blog 5 days a week, but also David Schechtman's daily blog. He's been writing for, 25-plus years, and we're really just trying to spread the word about what I'm talking about right here.
All right, guys. Well, thanks for listening, everybody. We really appreciate it. And Andy, on behalf of everybody, thank you again for your time.
And thanks for having me once again.